and welcome to Business Incorporated, coming to you live from Channel's television headquarters in Lagos. I am Bolaji Akinwale. Coming up on the program, G20 Summit calls for a revival of the global economy. Also on the show, survey shows the UK services industry rebounded strongly in the month of August. Plus, South Africa's PMI drops in August. Okay, let's begin with the G20 meeting. This time, comments from the World Bank chief, Jim Yong Kim, saying that the Group of 20 summit promises to bring the world economy back on the path of stronger growth. According to the World Bank president, the keynote speech given by Chinese President Xi Jinping at the opening ceremony of the B20 Summit for business leaders from the G20 countries was very important and comprehensive.
It was a very important speech, comprehensive. It touched on many issues that economists and others who are watching the Chinese economy were interested in. He's going to stay the path in terms of changing the growth model of China, that they have strong commitment, which was very good to hear. But I think the main message was that the process is open. China is open. This is a place where everyone should be able to participate, and especially the developing countries. This is the first G20 meeting that's hosted by a developing country, and that it is has such a strong developing country presence. And of course, for us at the World Bank Group, this is extremely important. He stressed over and over again that there are many win-win situations, and that we must take action to realize those win-win situations. It was an impressive and important speech that I think held all of our attention during the entire process.
That was the World Bank chief, Jim Yong Kim. We will bring you updates as regards the issues raised at that meeting later on the show. In the meantime, UK services industry rebounded strongly in August, and that suggests that the country will avoid recession. According to the market, CIPS Purchasing Managers Index, activity in the UK services saw its largest month-on-month rise in the service history. The index rose from 47.4 in July to 52.9 in August. A score above 50 indicates growth. It effectively takes services back to pre-Brexit levels. The return to growth for the services industry, which accounts for about 80% of the UK's economy, adds to recoveries in manufacturing and construction in August. The pound rose sharply after the release of the PMI survey, rising 0.6% against the dollar before falling back slightly to just over $1. And European stocks traded higher on Monday as oil prices rallied over 5%, and investors digested the latest U.S. jobs data, which paired expectations that the U.S. Federal Reserve would hike interest rates in September. Now, Ulrich Bath is DWTV financial correspondent who joins me from the Frankfurt Stock Exchange to take a look at how the markets are doing. Good afternoon, Ulrich. Welcome to the program. Now, the markets in Euro opened higher today, despite what some called the disappointing U.S. jobs data. Then there is the elections in Germany, which led to the ruling party losing some seats. Tell us how the markets are doing at this moment.
Yeah, the DAX is holding on here.
Yeah, the DAX is holding on here. It's not doing much. There are some gainers, there are some losers. It looks like a very tepid market, but remember that the market really soared on Friday after that jobs data in the United States, and it made for a very good week here at the Frankfurt stock market, all in all, and lots of shares are just taking a breather after that jump. Why did the market jump? Well, the jobs data is disappointing. Yes, it's disappointing from the point of view of looking at the strength of the U.S. economy, but immediately here it was interpreted as the Fed not being able to go with a rate hike next week this September when the next meeting comes rolling around, and that was what placated the markets here. That's what set people buying equities, because less competition from higher U.S. rates for equities, if you would. Chancellor Angela Merkel had a whopping defeat of her CDU party in the regional elections and state elections, if you will, Mecklenburg-Vorpommern, and that's the state where she has her own riding. That's where she has her political home. So that's being seen as a major defeat for the Chancellor, a major blow, a shot across the bow, an analyst today said. And the CDU now, her party, is number 3 in that state. It was number 2 before, and a right-wing extreme party, AfD, which is anti-refugee, it's anti-Islam, that's become number 2. So it's a worrying situation there, and people are talking about it here, but it's not something that is putting any brakes on the market. I don't think anybody in Germany expects at the moment Angela Merkel to be really in danger as in her position as party chairman and chancellor at the moment. Of course, also because of the question of a viable alternative lacking.
Now, investor sentiment was given a boost by a rally in oil prices after reports state that Saudi Arabia and Russia would make a joint statement at the G20 summit in China, calling for cooperation to support oil markets. Do you think this rally on oil stocks will be sustained?
It's difficult to say because it's difficult what will come out of this cooperation, how fast this connection will be, how concrete, how cemented, how determined these two very large partners will show themselves to be. But of course, it is a major step, but of course there are also all the other players in the world oil industry, not least the United States and also Nigeria or other countries, and it's yet to be seen whether, of course, the OPEC cartel is willing to, in some way, curtail production in order to hike up prices. The oil price is rising now. That's a good signal. There's some hope, but there's so many other factors playing into it that it's very difficult to make a forecast into any months going into the future.
Now, I know that the global headlines has been focused on the G20 summit, and that wraps up today with the leaders saying that there is the need to act and not just to talk. For example, on the worldwide overcapacity in steel production. How is the market digesting this viewpoint?
This seems to be a real result from the G20, at least from the point of view of the markets. The steel companies are going up here in the equities market here in Europe. Arcelor, world's biggest steel company, and also the German steel companies ThyssenKrupp and Salzgitter, they're leading their index counterparts. And the market seems to be putting a lot of hope that there is finally some progress into reducing overcapacity, into doing away with state-sanctioned and state-financed steel dumping, which is ruining prices for all the other competitors out there. Whether China actually can make progress in reducing its capacity and coming to more market-oriented prices, people don't know that yet. There are not all that many details on an agreement there, but there is hope in the market for this very, very difficult sector of industry.
All right, thank you so much, Ulrich Bath, a DWTV financial correspondent, talking to us from Frankfurt. Just before we go on break, Japan's government has warned that Brexit could result in the country's firms moving their European head offices out of Britain. The report from Japan's foreign ministry says the firms might want to move if the EU law cease to be applicable in the UK. It calls on Theresa May's government to deal with the company's concerns in a responsible manner. Now, Downing Street received the report earlier this week, and Japanese firms employ an estimated 140,000 workers in the UK, with Nomura Bank, manufacturing giant Hitachi, and the car makers Honda, Nissan and Toyota all having major bases in the country.